After the first month-to-month drop since the summer, could this housing market be headed for something a little cooler than that? My next guest says not likely. Let's bring in Ryan Gorman, President and CEO of Coldwell Banker. Ryan, welcome. Good to have you with us. I mean, I got to agree with Diana there and most people. The 2.5% drop in November looks like a little blip. Maybe it's a blip down. But overall, sales this year up 22% or 25% from this time a year ago. What kind of year have you all had at Coldwell Banker compared with last year?
It's certainly been a remarkable year, and I think that strength you referred to continues. So I wouldn't read anything into this other than a little bit of a seasonal decline. Still the year-over-year numbers, which I encourage you to pay attention to year-over-year numbers until we lap April, coming up here in a few months. Incredible strength. And I'd say that strength is really more universal than I've ever seen it across geographies, across price points, and really across product types, with single family and attached townhome leading the way.
When you single family attached townhomes, Diana pointed to affluent buyers and sellers, growth there huge, above $1 million, huge. Is that what you've seen in your business?
Certainly, the luxury properties, as well as I'd say kind of the midpoint properties, a little higher than the average sales price. We're Coldwell Banker. We sell more $1 million homes than any other brand, so we're certainly exposed to that trend. We're seeing a big lean into that. We're seeing people accelerate life plans, seek more indoor and outdoor space, increased likelihood that they're going to explore those tax and weather climates that are a little more favorable to them. So the higher end, but as well the mid end, is performing exceptionally well.
If you give me a ballpark number here, if you were to compare total transactions that have come through your system in 2020 compared with 2019, what have you seen?
Well, be a little careful, given we're a public company. We haven't disclosed this quarter's numbers just yet, but I will say that the NAR numbers do tell the story, and it's what I'm seeing in MLSs around the country as well, which is throughout the geographies, more consistency. NAR breaks it down to 4 territories, more consistent strength than I've seen before, and a continuation of that. So mostly what we've seen throughout the year, which NAR supports, is we've made up for that incredible slowdown in April and May. And if the trend continues, we'll more than make up for that with those national numbers. Is
the 2021 market going to be dependent on 2 things? One, the continued low rate of mortgage loans, the interest rates, number 1. And number 2, this trend of people away maybe from inner city urban areas and out to the suburbs or to tax havens or warmer climes. Virus-driven partly.
I think 21 is going to depend mostly on a continuation of these life changes. So some of what you mentioned is definitely true. Low rates support this market, but nobody moves 3 states away because of a great rate on a 30-year fixed rate. So it's really people seeking more space, the home that meets their lifestyle needs, as well as a continuation of those trends.
Shepard Smith here. Thanks for watching CNBC on YouTube.